friends, I hope you are all doing good. Welcome back. So in our previous class, we had discussed about residency status, determination of residency for tax purpose. This is what we had discussed in our previous class. So what did we complete in our previous class, sir? What discussion we had in our previous class? We found that for US taxation purpose, residential status of a person who is paying the tax is very important. If you are a US resident, or if you are a US citizen, for you, the income which you are earning anywhere in the world will be taxable in US only. So if you are a US citizen or US resident, and also resident alien, also same provisions are there. Even if you are a resident alien, for you, whatever income you are earning throughout the world will be taxable in US. However, if you are a non-resident alien, you will have to pay tax only on the US source income. So whatever income is for which the source is US, on that income only you will have to pay taxes. Now basically an individual are divided into two categories. You can either be a US citizen. If you are a US citizen, on worldwide income you will have to pay tax in US, or you may not be an US citizen. Now what US does is, if you are not an US citizen, you will be called as alien for that country. For that country, if you are not an US citizen, what will you be called as? You will be called as alien. Now here there are two categories. You can either be a resident alien or you can be a non-resident alien. So what is this resident alien? What is this non-resident alien? See, there are basically three types of residency status. Apart from you being an US citizen, there are three types of residency status. One is you can be a resident alien, or you can be resident non-resident alien, or you can have dual status. Only in some cases you will be having dual status. Sir, what is this resident alien? Resident alien means, see, alien means what, sir? Alien means a person who is not an US citizen. So if you are not an US citizen, for example, I am not an US citizen. So if I go to US, I will be called as alien over there. Okay, for US government, I will be called as alien. Now, what do you mean by a resident alien? A resident alien is a person who is an individual who is satisfying either the green card test or substantial presence test. So if an individual is satisfying any of these two tests, which tests, sir? Green card test or substantial present test, then he will be called as resident alien. Sir, should I satisfy both the tests, sir? No, you can satisfy any one of the tests. You will be called as resident alien. Then who is this non-resident alien, sir? Non-resident alien means an individual who does not satisfy any of these tests. So if an individual is not satisfying both of these tests, either of these tests or both of these tests, then he will be called as non-resident alien. If I don't satisfy the green card test or substantial present test, I will be called as non-resident alien. Now there is dual status alien also. Sometimes what may happen is an individual may have dual status. What is dual status here? He may be called as resident alien as well as a non-resident alien. An individual may be called as resident alien and he may be called as non-resident alien. Sir, when will he be called as resident alien? When will he be called as non-resident alien, sir? This dual status will come to an individual. That dual status will come only in the year when he is coming to US, or only when in the year when he is going from US. So normally the dual status will come in the year of arrival and in the year of departure from that country. Anyways, we'll see that point. Resident alien means what, sir? A taxpayer who has satisfied any one of the condition given below. Which are the two conditions there? One is green card test. Green card test means what, sir? You are legally admitted for permanent residence in US. Meaning what, sir? US government has given you a green card. So if US government has given you a green card, that means the US government is allowing you to stay in US permanently. So you will be called as resident alien. You will be called as resident alien, or you will be called as that you have satisfied green card test. Then if you are not satisfying green card test, meaning if you have not got a green card from US government, then I will see the substantial present test. If you are substantially present in United States, then also you will be called as resident alien. Substantial present test means what, sir? A taxpayer can be resident for US if he is physically present for at least 31 days in the current year, or and total of 183 days during the current year and 2 preceding previous years. So 3 years combined together, which includes current year, last year and a year before that last year. In those 3 years combined together, you should be present for 183 days. When you are counting this 183 days, I will take all the days you were present in the current year, 1/3 of the days you were present in the last year, and 1/6 of the days you were present in the year before that. So for example, for the year 2024, if I want to be called as resident, I should have stayed for 31 days or more during 2024, and for 24, 23 and 22 combined together, I should have stayed at least for 183 days, wherein I should have stayed, when I am taking the number of days, I should take all the days of 2024. I should take whatever days I have stayed in 2023 into 1/3, and whatever days I have stayed in 2022 into 1/6. So then I will be called, I would have satisfied substantial presentation. We had seen some examples also for this. And what are the days which are required to be counted for days present in India? What is date which are not required to be counted, etc. We saw. And we saw what is non-resident alien. Non-resident alien means an individual who does not satisfy either green card test or he is not satisfying the substantial present test, then he will be called as non-resident alien. Dual status alien means what, sir? An individual who is resident for a part of the year and he is a non-resident for rest of the year, then he will be called as what, sir? Having dual status. This typically will happen in which year? This will typically happen in that year when he is coming to US, or in the year when he is departing or going from US. So normally this will happen, and for the period when he was a resident, he will have to pay tax for global income, worldwide income, and for the previous period when he was not a US resident, he will have to pay only the tax on US source income. This is what we had discussed in our previous class, and of course we had seen some MCQ questions also with respect to this topic. Now we'll start our discussion on a new topic. Okay, so we'll start our discussion on a new topic. Next topic is what, sir? Next topic is an important topic, good topic. What is the name of the topic, sir? Next topic is your income tax rate. Federal income tax rates. And what are the deductions which you can claim? For those who are watching me for the first time, we have this practice of writing the notes, correct? So that these notes can be used by us for our revision purpose. And once this topic is complete, we go through this particular topic from the material. But today's topic is something which we, even if we don't go through it, the material, we will be able to, this topic does not require us to go through the material. Anyways, let us start the discussion on this topic. Federal income tax rates and deductions. What do you mean by this, sir? Federal income tax rate and deductions. What is the income tax rate in the United US, and what are the deductions available? Basically, we are going to learn about computation of tax of a person in this particular topic. Now, what does US law say, sir? What does the US law says? US law says that you should pay taxes on your taxable income. What is the first point, sir? That tax is calculated or computed on the taxable income of the taxpayer. On what, sir? On the taxable income. The tax is calculated on what? On the taxable income of the taxpayer. So first and foremost thing which we have to do is compute our taxable income. Now this computation part, what is taxable income, how is this computed, etc. There are respective chapters for this. In that chapter we are going to learn about detail what is gross income, how is this income computed, etc. But in simple words, I'll tell you how is this taxable income computed. For computation of taxable income, what you are supposed to do is, there is a 3-step process which you have to do. First, you will have to compute the gross income of the person. Then you will have to compute the adjusted gross income. From that gross income and adjusted gross income, you subtract the deductions which are available, you will get your taxable income. As simple as that. As simple as that. So 3-step process. First, we will have to compute what's your gross income. What do you mean by gross income? Gross income is the total income of the person. total whatever different types of income which is earning, whether it is an earned income or whether it is an unearned income, whatever income a person, an individual is getting from whichever different places, all the incomes will be taken together. That income will be called as his gross income. Now from that gross income, we are required to subtract some deductions. There are some adjustments which you are required to do that to that income. Once we do that adjustment, whatever we get now is called as adjusted gross income. From this adjusted gross income, we subtract some deductions which are allowed under the US tax laws. Then we will get our taxable income. Now it is on this taxable income we have to compute the tax. How will we compute the tax, sir? Whatever rates are given, based on the rates which is given in the law, we'll have to compute the tax for different categories of persons who are there. Okay, so I'll just write a normal format, and I'll just give one line points for what is the meaning of that particular thing. So let us write the format for computation of taxable income and tax liability. So what is the format for computation of taxable income, and how do I compute a person's tax liability? So we'll write particulars and amount in dollars. So first I have to take what, sir? First and foremost thing which I have to take is the total income earned by a person. What is his gross income? What is the total income a person is earning? Take that total income. From that total income, you are required to subtract adjustment to the income. Normally these are called as above the line deduction. Above the line deductions. Now if you have any idea about your income tax law which we have in India, if you have any idea, then I will just give reference of how it is similar to our income tax law. Now under income tax law, what do? We first calculate the gross total income of a person. Correct? Whosever income tax we are computing, we first take his gross total income. From this gross total income, we subtract deductions. Deductions under chapter 6A. Which are these deductions? These are those deductions like a person has invested for under ATC for life insurance premium he's paying, or he has invested money in PPF, or ATD medical insurance premium he's paying, or ATE interest on education loan he's paying, or ATG he has given donation to someone. So whatever deductions we have under 80 section 80 or chapter 6A, all those deductions we subtract, and now what we get is called as our total income. And under income tax law in India, the tax is paid on which income, sir? This total income. Correct? On this total income. Now while computing the tax also, if you are an individual HUF ... if you are an individual, you get something called as basic exemption limit is there. What is this basic exemption limit? There is an amount up to which you don't have to pay tax. Normally, if your income is up to 2.5 lakhs, you don't have to pay tax. So that is basic exemption limit under income tax law. So accordingly, that is for computation of tax purpose. Correct? So this is how we do in Indian income tax law. Now it is just similar to this what we are going to learn for US tax laws. What US tax law says, you compute your gross income. Once you compute your gross income, from your gross income you subtract the adjustment to the income, adjustment to gross income. These are nothing but the deductions. These are nothing but the deductions which we. These are similar, not same, but they are similar to the deductions which we have in our India for income for computation of income. So once I subtract this, these are called as above the line deductions. Whatever I get now, this amount which I have got now, that is not my taxable income. No, 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 no. I have to pay tax on taxable income. This what I have got now is called as adjusted gross income. Okay, this is called as what, sir? AGI, adjusted gross income. Now from this adjusted gross income, you are required to subtract, from this adjusted gross income, you are required to subtract deduction. Deduction. Sir, what deduction I have to subtract? You are required to subtract the standard deduction, whatever standard deduction is there, or you will have to subtract itemized deduction. You will have to subtract the standard deduction or the itemized deduction, whichever is higher. Compare both of them. Take your standard deduction, compare that standard deduction with itemized deduction, and take whichever is higher. You take whichever is higher among them. Now this you take, you subtract this. Now what you get is called as your taxable income. Now whatever you have got is your taxable income. It is this taxable income on which you have to pay the taxes. So tax is required to be paid on which income, sir? The tax is required to be paid on taxable income. Yeah, so tax is required to be paid on which income, sir? Tax is required to be paid on taxable income. It is this taxable income on which tax computation you are supposed to do. Sir, how will I do the computation? Whatever taxable income is there into the rate of tax. Whatever taxable income is there into the rate of tax is what you have to pay. Sir, can you please tell us what is this gross income, sir? As I told you, there is a separate chapter where we are going to learn about this gross income, what are the above the line adjustments, etc. As of now, gross income means all the different types of income which a person is earning. Whether that income is an earned income or it is an unearned income. Sir, what is this earned income you are telling, unearned income you are telling? Earned income means an income which a person is earning through his own efforts. If I am earning an income by my physical work, for example, I am doing any business, I am going and working in some company, they are paying me salary or wages, they are all my earned income. Unearned income means what, sir? I had invested my money in some shares, the company is giving me dividend. I had invested my money in some bank account, the bank is giving me interest. So these are unearned income, etc. Earned income, earned or unearned income, whatever type of income it is, you take all the different types of income which a person is earning. From that subtract above the line items, you will get adjusted gross income. From that subtract standard deduction of or itemized deduction, whichever is higher, you will get your taxable income. Okay, so this will give you your taxable income. Sir, taxable income to I understood, sir, but what is the tax rate which is applicable? We'll do the tax computation. We'll first write tax rates, then we will see what are the deductions available, then we will do questions on different cases, and we'll discuss all the questions. So tax rates or federal income tax rate. Federal income tax rates. So what is the income tax rate, sir? Now, depending upon the type of person you are, depending upon the category you are following, the tax rate is given for you, correct? So first category for us is who, sir? First category for us is if you are a single. If you are a single, if you are a person who is, you remember, right? We have 5 different status for filing. Single, married filing jointly, married filing separately, qualifying surviving spouse, or head of household. So for these different categories which we have tax rate separately. So for single filers, if your income is income in dollars, tax rates. For a single filer, if your income is $0 to $11,600, meaning from $0 to, meaning if you have 1 rupee income also, you'll have to pay this much. Income over here means what, sir? Taxable income. If it is from $0 to $11,600, the tax rate applicable will be 10%. Tax rates applicable will be what, sir? 10%. If your income is from more than, if the income is more than 11,600, meaning 11,601 to 47,150 rupees, then it will be 12%. If it is more than 47,150 and is up to $1,525, then it would be how much, sir? 22%. If it is more than 1,00525 to what, sir? 1,91,950, then for you the tax rate will be 24%. For you, what will be the tax rate, sir? Tax rates will be 24%. If it is more than 191,950 and if it is up to 243,725, then the tax rate will be 32%. If it is more than 243,725 and if it is up to 6,09,350, then for you it will be 35%. And if it is more than 609,350, tax rate will be flat 37%. Tax rate is what, sir? 37%. Now this is the tax rate applicable. Now please note some important point to be noted. What is that point, sir? Here tax is required to be, this is a slab which they have given. What do you mean by slab, sir? Up to one point you don't have to pay tax. If your income is from 0 to 11,600, you will have to pay 10%. From 11,600 to the next level, you will have to pay 12%. After that, 22%. After that, 24%. So here the tax rates are, tax rates are slab rates, that is income is taxable on progressive basis. Income is taxable on what basis? Income is taxable on progressive basis. What do you mean by progressive basis? As and when your income is increasing, the amount of tax which you have to pay will also increase. Now I'll just do one question to make you understand this, and then we will write for everything, and then we will do the questions for other thing, just to make you understand that how this actually works. Let us say, example, let us say, what, sir? Mr. James Bond, aged 32 years, Mr. James Bond is single aged. Your marital status is very important for filing your income tax. Single aged, 32 years, has a taxable income of $78,400. Compute his tax liability. So if I ask you to do that, what will be the answer? If you want to try, you can try it once. What would be the answer in this particular case if I asked you to compute the tax for this person? Now slab rate means what, sir? Answer. I'll write income, tax rate, and tax amount, and everything is in what, sir? Dollars only. Now what is my income? My income, we know, from 0 to 11,600, but tax rate applicable for me is 10%. So what will be the tax amount, sir? The tax amount will be 11,600 into 10%. The tax amount which will come to how much, sir? 1160. Correct? Next, from 11,601 to 41,150. What is the next slab? 47,150. The tax rate is 12%. I'll apply what rate, sir? 12%. So which is, see the difference, 47,150 minus 11,600. The amount comes to 35,550. For this, I'll apply 12%. Please note, many students make a mistake over here. What do? They subtract 11,601. No, 11,601 you should not subtract. That one also you will count. No. Okay. So you should count it from that one. Say for example, if I ask you from 1 to 10, how many numbers are there? What is the total numbers? What will you tell? 10, no? Will you do 10 minus 1 and you tell 9? No. So when you are subtracting, that 1 is also required to be counted. The place where you are starting from. Or else you can better write it as what, sir? Even in a better way, if you want to say, if you get confused like this, you can write it like this. If it for more than 11,600 to 47,150, it is 12%. So tax amount will come to how much? 355 into 12%, 4266. Then for more than 47,150, up to where is the slab? The next slab is up to 1,05,525. But should I go up to here, sir? Should I go up to this point? No. My income is how much? 78,400. When my income is 78,400, why will I go till that point? Meaning, can I say my income is falling in this category? So I will take more than 47,150 and I will take up to 78,400 only. Correct? I will take from this to how much, sir? My income 78,400. Tax rate is 22%. Now how much is the difference, sir? 78,400 minus 47,150, which comes to 31,250 into tax rate is 22%. Into 22% will give me 68. Will give me what, sir? 6875. This is the tax which I have to pay on this slab. So total tax liability is what, sir? So total tax will be 12,301 dollar. 12,301 is the total tax which I have to pay. This is how tax is computed under slab system. So up to certain amount you don't have to pay any taxes. After that there is certain amount of taxes. After that there is another certain amount of taxes. So this is how you calculate tax for what, sir? This is how you calculate tax under slab system. Now we have just done one example. We will definitely do examples for all the different cases, but better we first write what is the provision, correct? First we will write the tax rates for everything, and then we'll also write the what is the deductions applicable to each and every person. So here if you see the computation, there is something called as standard deduction, meaning up to this amount they don't have to pay tax. Itemized deduction, etc., that we'll learn later in later chapters. But as of now, we learn about what is standard deduction, meaning up to how much they don't have to pay tax at all. So there is a limit up to which they don't have to pay the taxes. So we will write that, and then we'll start solving the question. That will be even better for us. Okay, sir. Let us write for other people. Now, other people. Next category is who, sir? Second person we will take as our married. Point number 2. Married filing jointly and qualifying surviving spouse. So which is nothing but MFS and for QSS. So for them, what is the tax rates? For them, what is the tax rates? See, the rates of tax are same, but this slab will change. So repeat. The tax rates are same, meaning irrespective of what type of filing status you have, the tax rate will be same, meaning the lowest tax rate will be 10%, highest tax rate will be 37%. Irrespective of who you are, the tax rate will remain same. The lowest will be 10%, highest will be 37%. However, the slabs are there, no? The slabs are going to change. What is the change in the slab? We will see that. So I'll keep the tax rate as it is. Now, what is a slab for? A married filing separately, a married filing jointly, MFS, married filing jointly, MFJ. Married filing jointly and for qualifying surviving spouse. Now, their income is from 0 to 23,200. See, by the way, married filing jointly means what? Both husband and wife, they both are combining and filing their return together. They are called as married filing jointly. Normally, what was the limit? 11,600. What is twice of this? 23,200. So when you are filing with your spouse, when you are filing your return with your spouse, then you will get double the benefit, correct? So 11,600 was the normal rate, into 2 is 23,600. However, this will not be applicable for all the cases, meaning after a certain level, no, the rate, the amount will change. So basic level, at the beginning level it is same, then twice of the amount, then we have more than 23,201 up to 94,300, then more than 94,300 up to 201, 50, more than 201, 50 up to 383 900. So we'll just write down all these points first. I mean, here there is no explanation which is there. Sir, why this limit is there? What is lawmakers are making the law? We have to just follow this particular thing. Meaning this is the income slab rates etc. That is determined based on what income a person is earning, how much is there, how much benefit the government wants to give them etc. So here there is normally no explanation which is there. 48,7 450. 48,7 452 732 731 200. Now here, from here it changes. So till this point it is double only, correct, till 32%. Then it changes the limit. Now the higher limit is changing to 7,31,200, and then if it is from 7,31,201, that is more than 200, more than 731,200. So this is for married filing jointly status holder and for qualifying surviving spouse status holder. Next category whom we have is what, sir? The next category for our discussion is, the next category rate is for head of household. So who is head of household? If you are an unmarried, or if you are considered to be unmarried, and if you are having any person who is dependent on you, and if you are maintaining such dependent, then you will be called as head of household, correct? So if you are a head of household, what is the tax rate applicable to you, sir? For head of household, rates are same, limits are different. For head of household, from 0 to 16,550 it is 10%, and from, if it is more than 16,550 up to 63,100 it is 12%, more than 63,101 up to 1,500,000, this is the rate. 1,500,000 to 191,950, 191,950 to 243,700, 243,700 to 609,350. If it is more than 609, then it is 37%. That is what, sir? 37% is the tax rate. Now, sir, how is it practically possible for us to remember so many different rates, sir? How will I even know? How will I even remember, sir? Because if they would have given some fixed amount, say 0 to 5 lakhs, this is the limit. 5 lakhs to 10 lakhs, this is the limit. Then this multiple is very easy to remember, sir. But here too they have given randomly some amount they have given, no, sir. So how do I remember all these rates, sir? See, normally you don't have to remember all these rates, okay? Normally, meaning tax computation, in tax computation, what is important is the deductions which are there. Deductions is something which you should compulsorily remember. When a person has to file his income tax return, if his income is how much, then he has to file his income tax return. That is something which you should definitely remember. Tax rates are something which you don't have to remember, okay? But deductions, please note, deductions Compulsorily you should know. All the deductions you should know. And one more category, last category, which is our married filing separately. If I'm a person who is married filing separately, then for them, what is the limit, sir? See, married filing separately, if you remember, married filing separately, that means what, sir? I am a married person and I am not filing my return with my spouse. I want to file my return separately. Lawmaker says then you are as good as your single person only. So for you, the rate will be, up to 32%, the limit is same. So 0 to 11,600, this limit is same up to what, sir? 32%. The limit is same up to 32%. The limit will change from 32%. So if it is more than 2,4,3,725 up to 3,65,600, and if it is more than 3,65,600, then it is 37%. Of course, those who are watching the recording, you can, if you are writing this, then of course you can pause and write, or else anyways you are going to get the notes. Yes, sir. So this is the rate. Now, as I told you, so this is what they have to pay. This is the tax which they have to pay. Now, what is more important than this is when they have to file return. What is the limit after which their income crosses they have to file return, and what is the standard deduction available for them? When do they have to file return, and what is the standard deduction available to them? Tax computation, after discussing this the filing threshold limits, and after discussing the standard deduction, we will discuss about the tax rate. We will start filing the we'll start doing the questions on tax rate computation. Filing thresholds. What is this filing threshold, sir? If your gross income, here what is important, your gross income is more than this amount, you will have to file. If an individual's gross income, individual depending upon what status he is following, if an individual's gross income is equal to or more than, if an individual's gross income is equal to or more than the below amount, based on their filing status, comma, they must file tax return. So if your income is more than this particular limit, you'll have to file your tax return. Please note, this is really important. This is something which is important. So what is the limit, sir? Case number 1, if you are a single. Now, if you are a single person, I'll do one thing. I'll try to make the presentation better. What is your filing status, your age, and your filing threshold, and your WhatsApp filing threshold. If you are an case number 1, if you are a single person, if you are a single person, if you are a single person, then whose age is less than 65 years. If you are a single whose age is less than 65 years, then you will have to file your return if your gross income, please note which income, gross income, not taxable income. If your gross income is how much, sir? More than this amount. If your gross income is more than this particular amount, 14,600, if your this is the limit applicable to you. Then if your age is greater to equal to 65 years, then for you this threshold limit is 16,550. As I told you, these are the limits which you have to remember. These are the limit which is required to be remembered by us. They are going to ask these limits. Then if you are a married filing jointly, or if you are qualifying surviving spouse, then if you are aged less than 65 years. Married filing jointly means what, sir? Both husband and wife are filing their return together. In that cases, they will be called as married filing jointly. For them, whatever is there for, and if their age is less than 65 years, whatever is there for normal single person, double of that will come to them. So what will be the limit for them, sir? If their age is less than this thing, sir, normally it was 14,600 into 2 times, sir. Yes, 29,200. Sir, but sir, what if one of the person's age is more than 65 years? Sir, see, sir, this case too you are telling when both husband and wife are less than 65 years. Say husband is 40, wife is 35, husband is 32, wife is 28. So this is the case, sir. Sir, what if husband is say 58, wife is say 66? Now what will happen, sir? Or husband is 70, wife is 64. Now what will happen, sir? Case number 2. If one spouse is more than 65 years, then what will happen? If one of them is more than 65 years, for them the limit will be 30,000. For them the limit will be 30,750. For them what will be the limit? 30,750. Sir, what if both are 65 years or more? If both are 65 years or more, then for them the limit will be 32,300. How much, sir? 32,300 rupees. Sir, what if I am a married filing separately? Case number C. If you are a married filing separately, very bad provision for them. If you are a married filing separately, irrespective of your age, if your income is more than $5, 500, 5,000, 50,000, 5 lakh, $5. If your income, irrespective of what your age is, less than to, more than, etc. If you are a married who is planning to file his return separately, then come, please file it. Even if you are earning $10, you will have to file it. Then if I am head of household, HOH, if I am head of household, then if you're aged less than 65 years, then for you it will be $21,900. If you are aged 65 years or more, then for you the limit will be 23,850. For you, what will be the limit, sir? 23,850. Next, so these are the different statuses which we have. Now apart from that, they have given two more categories for filing threshold. I'll write those two categories also, meaning normally an individual can fall under any of these five categories only. No, when we discussed this topic called as filing status, we understood that an individual can fall under only these five categories. He can be a single, married filing jointly, married filing separately, qualifying surviving spouse, or head of household. He can be fall under only these five categories. But apart from that, they have given for threshold purpose, they have given two more categories, which says they have given two more this thing thresholds, which is for any filing status, irrespective of who you are, that is whether you are a single, married filing separately, married filings jointly, head of household, qualifying surviving spouse, irrespective of who you are, any type of person. If you are a self-employed, if you are self-employed and your net earnings is more than equal to $400. If you are a self-employed person, please note, self-employed means what, sir? I am doing my own business, I am running my own profession, I am say a taxi driver, a cab driver who is not working for anyone. I have my own cab, I am driving my own cab and I am making my living. Then I will be called as what, sir? I will be falling under this category. Then EF. If you are what, sir? Irrespective of any filing status, lawmaker says irrespective of any filing status, if you are a church employee, if you are a church employee whose earning is, if you are a church employee and earning more than equal to $108.28. Sir, what kind of limit is this, sir? 108.28. Yeah, see, for church lawyers, etc., their church decide what is the amount which is required to be paid. So lawmakers have, based on that amount which they have given, no, they have decided and got this price. So if you're a church employee, then for you the limit for filing return is what, sir? $108.28. Whatever we saw now is filing threshold. What do you mean by filing threshold? If your gross income crosses this particular limit, you will have to file the return. Now, what is this filing, sir? What is this threshold limit, sir? If you are a single and if your age is less than 65, then 14,600. So further, if you are a single whose age is 65 or more, then for you it will be 16,550. Sir, if I am married filing jointly, or if I am a qualifying surviving spouse, then for you, if your age is less than 65, it is 29,200. If your age is more than 65, 32,300. If one of your age is more than 65, 3750. Then if I am a married filing separately, lawmaker says no mercy for you. You will have to file your return if your income is more than $5. Then head of household, if the age is more than, if the age is less than 65, 21,900. If it is more than 65, then 23,850. And if you are a self-employed, $400. If you are a church employee, 108.28. Now, sir, this though I understood, sir. Threshold, meaning if my income is crossing this limit, I will have to file my return. No, sir. Yes, perfectly right. Sir, you also said that you are going to teach about deduction, sir. What is the deduction, sir? Meaning, now we are going to see from my income how much income, whatever income I am earning, from that income, how much is the deduction which I am going to get. We are going to see what, sir? Deductions now. Okay, itemized deduction is a topic which we will see separately when we are going to discuss about income. As of now, we are going to write standard deduction. Sir, why is this standard deduction only we are discussing right now? Because standard deduction is something which is standard. Itemized means what, sir? If you have made a contribution somewhere, if you have that particular item applicable to you, only then that itemized deduction will come. Or else normally what is the deduction which is going to come for you? It is standardized deduction. So we will first see standardized deduction. And our today's actually basic discussion is what, sir? Basically the filing threshold, the tax rates, so we have seen, and standard deduction. Now this I'll start with a new page because I'll write the deductions are basically of two types. Deductions are of two types. Deductions are divided into two categories: standard deduction which is it is available to everyone based on their filing status and we have second category, additional deduction available only to certain, available only in certain cases, subject to fulfillment of conditions. Okay, normally each and every category has its own standard deduction. We'll see the standard deduction, but additional deduction will be given only if you satisfy that particular point which is specified, and they have given the rate of additional deduction also which you are going to get. So let us first see what is the standard deduction. Standard deduction. Standard deduction is how much, sir? So depending upon your filing status is this. Then for your standard deduction will be this. If you are, case number 1, if you are a single, or if you are a married filing separately. MFS is what, sir? Married filing separately. If you are a single or married filing separately, for you the standard deduction amount is what, sir? 15,600, meaning from your income. Please note, can I say these people will have to file their income if their income is more than 14,600? They'll have to file their return if their income is more than 600. When I'm taking this income, I'm seeing which incomes are gross income. I'm seeing which income? Gross income. Now, if your gross income is say $15,000, if my gross income is say $15,000, I'm a single person. If my gross income is $15,000, can I say from 15,000 I will subtract? They will subtract 14,600. From 15,000 they'll first subtract 14,600, and then whatever is left over on that, what is the rate applicable over here? Hey, what is the rate applicable to these people? For these people up to 11,600, what is the rate applicable? Please note, this 11,600 is a taxable income which I am seeing. What is taxable income? After your gross income, you give above the line adjustments, and then you give subtract the deductions. After that, whatever is left over is taxable income. So in this case which we saw right now, if my income is $15,000, I will subtract standard deduction and all the other deduction, assuming I don't have any other deduction. What is 400? This is my taxable income. On my taxable income, I'll have to apply tax rate of 40%. How much? 10%. What is the tax I have to pay? 40. Correct? So we will. So this is what deduction is going to talk about. This is what deduction is going to talk about. Deduction is going to tell us up to how much you don't have to pay tax, or from your income. Sorry, up to how much you don't have to file your return is this. From your income, how much can you subtract? On how much amount you should not pay the taxes. Second people. Second category is head of household. Head of household. For head of household category, what is the deduction, sir? 21,900. For head of household, how much is it? 21,900. Next we have married filing, jointly or qualifying surviving spouse. If you are married filing jointly, or if you are a qualifying surviving spouse, for you the limit is 29,200. If you are, sir, only 5 categories are there. No, sir. Another point is also there. Yes. If you are a dependent, for you there is a very good deduction limit. For you the deduction will be your earned income for you the deduction will be your earned income plus $450, your earned income plus $450, or a limit of, so let us say this is X, or a limit of $1300, whichever is higher. However, restricted to, it shall be restricted to $14,600. It shall be restricted to what, sir? 14,600. Okay, so for a dependent person, we have discussed dependent, correct? No, for a dependent person, earned income plus 450 or 1,300, whichever is higher. However, this entire limit will be restricted to how much? 14,600. Sir, I didn't understand this point at all, sir. I didn't understand this point. For example, if I am a dependent, say I am a dependent child whose age is 17 years old, and I am earning some money of my own. Now, for me, I am earning how much, sir? I am earning, let us say, $10,000. If I am earning $10,000, if I am a dependent child and age 17 years, if I am earning $10,000, what is the deduction which is going to be given to me? Sir, my earned income is $10,000 plus $450 equal to 10,450 or a limit of 1300, whichever is higher. Therefore it will be 10,450, and it shall be restricted to how much? 14,600. Therefore how much deduction will I get? 10,450. Sir, what if I'm a 17-year-old dependent and I am earning dollar 15,000? Then for you, how much deduction will you get? $15,000 your earned income plus 450, which is 15,450, or the limit of how much, sir? 1300, whichever is higher, 15,450, but shall be restricted to 14,600. Therefore standard deduction which this person is going to get is how much? 14,600. I hope this point is clear. Sir, what if I am a dependent child, age 16 year, and I am earning $800. $800? Yes, sir. Then for you it will be 800 plus 450, which is 1250, or limit which is 1300, whichever is higher. Therefore 1300. 1300 is the deduction which is going to be given. Sir, then it will come to negative. No, of course, 1300 means that is the maximum deduction which you can claim. I hope this point is clear. For dependent child, this is not dependent child. For a dependent person, this is the limit. So this is the normal standard deduction which is available to you. Okay, this is the normal standard deduction available to you. You will also get something called as additional deduction. In some cases, you will also get something called as what, sir? Additional deduction. Sir, what is that additional deduction, sir? Point number B. Additional deduction. I hope you have understood the meaning of deductions, correct? So if an individual's income is $1,500, then on what amount he'll have to pay tax, sir? He will have to subtract $1,460, and his taxable income will be what, sir? His taxable income will be $400, correct? Just like that, if your head of household, it is 21,900. For married filing jointly and separately, married filing jointly and qualifying surviving spouse, it is 29,200. And for dependent, we saw just now, correct? So, sir, you said additional deduction. Yes, additional deduction. Additional deduction will be given if you fall under under two separate categories. Only then you will get additional deduction. Which are those categories, sir? A taxpayer is entitled to additional standard deduction. Additional standard deduction. A taxpayer is entitled to additional standard deduction. A taxpayer is entitled to additional standard deduction if they are aged 65 years or older at the end of the year. So if your age is 65 years or more, and or and or, meaning this condition if you satisfy, then you will get extra. We'll ignore this. Or you are a blind, or you are partially blind. See, if you are completely blind, no problem. If you are partially blind, you will have to obtain doctor's certificate. Obtain doctor certificate. In these two cases, you will get additional deduction. How much additional deduction will be given, sir? How much additional deduction will be given? Amount of additional standard deduction. If you are single, or if you are head of household, if you are single or if you are head of household, for you it will be $1950. And if you are married filing jointly, married filing separately, qualifying surviving spouse, $1550. This is for each condition. This is for what, sir? Each condition separately. Sir, no, sir. Purile, sir. I didn't understand this part. This is for each condition separately. What do you mean by this? For example, example number 1. Tony, age is 35 years. What is the standard deduction available to him? Sir, he will get standard deduction of 14,600. Will he get any additional standard deduction? Answer is no. Therefore, total standard deduction will be 14,600. Example 2. Tony is age 35 years and is blind. Then how much will he get? If his age is 35 years, that means normal deduction, he will get whatever normal is there, and he is also a blind person. So what will be the limit? For him, the standard deduction will be 14,600. And because he is a single, let us say he's single, of course, he's single. Because he's a single, and please note, if the question is silent, what are you going to assume? That he's a single, correct? Unless until they specify that he's married, you should assume to be single. He will get an additional standard deduction of how much, sir? Because he is blind, he will get an additional standard deduction of 1950. So he will get a total of how much, sir? 14,600 plus 1950, 16,550. Example number 3. Tom age is 67 years and he is blind. Tom's age is how much? 67 years and he is also a blind. So because Tom is single, correct? Let us write that also. He will get a standard deduction of 14,600. Additional standard deduction. How much additional standard deduction? 1950. One more additional standard deduction. 1950. Why, sir? First one is for age. Second one is because he is blind. Okay, so for each condition it will be separately. 18,500 is the total standard deduction available to him. I hope this point is clear to you. This is the total standard deduction available. This is what's the total standard deduction available in each of the cases. I hope this point is clear. If for you this point is clear, sir, why don't you tell us what if I am married filing jointly, sir? That also I'll tell. Okay, because here everywhere you spoke only about single. Is this additional standard deduction available also if I am married filing jointly separately? Yes, we have written that point, right? We have written for married filing jointly separately or qualifying surviving spouse, it is 1550. We will take an example. Tom and Jerry ante. Assuming Jerry is a female name. Jerry are married. Tom and Jerry are married. Full stop. Tom is aged 67 years. This will be too much writing. For an example, Tom 67 years, Jerry 62 years are married. And have elected or opted to file return jointly. What is the standard deduction? So if you are married filing jointly, what is the limit applicable to you? For married filing jointly, it is 29,200, which is nothing but 14,600 ka double. So they will get a standard basic standard deduction of 29,200. Additional standard deduction will they get, sir? Yes, 1550. For whom, sir? Tom, age is more than 65. They'll get an additional standard deduction only for Tom. So how much will they get in total? 3750. Sir, what if Tom is more Tom? Okay, we'll take that point also. Example 5. Tom 67, Jerry 66, married filing jointly, both are blind. Now what will happen? If both of them are blind, what will happen? They will get their normal standard deduction of 29,200 because they are married filing jointly. Then they will get additional deduction. How much, sir? 1550 because Tom is more than 65. 1550 because Jerry is more than 65. 1550 because Tom is blind. And 1550 because Jerry is blind. Okay, not okay, students? 29,200 plus 1550 plus 1550 into 4 plus 29,200. 35,400. So we have taken all the cases. Of course, you can you can make your own examples and take different cases for this. Okay, so I think this point is clear to you all. Shall we now do some computation question? One or two question I'll take up for computation. Any questions till now? Whatever we have discussed. Anyone has any question? Let us take some examples. Examples. Single though we had done one question, right? Let us write down a question. Dilip and Anna are married and opt. Don't let us not write my name. We'll write what, sir? D. Donald and Anna are married and opt to file return jointly. Now nothing is given. What is the age assumption you're going to make? Less than 65 years. Following using below details, compute their tax liability. So what details they have given? Combined gross income. So if you're a married filing jointly, you will have to pay tax on your combined income. So combined gross income is $1,600, $1,60,000. Adjustments to income or above the line adjustment, $5,000. C. Yeah, above the line adjustment. Itemized deduction, data not available, or we'll ignore this point. Now they have asked us to compute the tax on this. How will I compute the tax? First, for computation of the tax, first thing which I have to do is what, sir? Compute the gross income. First is what, sir? I should compute the taxable income. They have given combined gross income. Answer. Computation of taxable income. What is my taxable income? Particulars, dollars. I'll take my combined gross income, which is $16, 1,60,000 less adjustment to income. How much? 5,000. This is nothing but our above the line adjustments. If I subtract that, what I get is called as adjusted gross income. How much is that? 155, ting ting ting, less what, sir? Just now we studied less what, sir? Standard deduction. how much is the standard deduction which they'll get? Sir, since there is normally, sir, 14,600 is for single. Sir, both are filing together 29,200. Hey, why are we subtracting standard deduction over here? Because up to this amount, they'll not have to pay any taxes. Yeah, correct, not correct. What is the standard deduction for these people? The standard deduction for married filing jointly is how much, sir? 29,200 rupees. So we'll take that. And I'll get my taxable income. How much? 1,25,800. 1,25,800. Now let us compute the tax on this. Tax on taxable income. So how will I compute the tax, sir? First, I'll write my income, then the rate of tax, then tax amount. Now, income from $0 to, for married filing jointly, it is how much, sir? 23,200. And from 23,200 to 94,300. 23,200. The rate is 10%. Rate is something which is very easy to remember. 23,200 into 10%. Tax amount will come to then more than 23,200 up to 94,300, 12%. 94,300 minus 23,200, 71,100 into 12%. 8,532. More than 94,300 up to 12,5,800. What will be the amount, sir? Rate is 22%. Minus 9,300 into 22%. 6,930. 31,500 into 22%. So what is the total of this? The total of this comes to ting 8532 plus 17,782 is the tax which is payable by them. Of course, if they have any credit, etc., that credit will be subtracted, but that is something which you will have to learn later. But I hope this point is very clear to you all. Now I'll take one question. Mickey, aged 26 years, has a gross income of 60,000. He has no above the line deductions. Compute his tax liability. See, all this question, more than tax liability, what is important for you to compute? The total income. Because computation of tax is one part. Computation of total income is important because up to some amount you don't have to pay tax, etc. Or up to some amount you don't have to file return and there is standard deduction available. Compute his taxability if he is blind. Now, in this case, what will I do, sir? What will I do? First, I'll have to compute taxable income. Computation of taxable income. So, what is the taxable income in this case, sir? Sir, particulars, dollars. First, I'll take what, sir? My gross income. From my gross income of 60,000, subtract above the line deductions. Do I have above the line deductions? No, sir. I will get my adjusted gross income 60,000. Subtract standard deduction. How much standard deduction will he get? Sir, see, sir, normally he should get 14,600. Correct, no? Normally he should get how much? 14,600. But because he is single and he is blind, he'll get extra what, sir? 1950. He'll get extra 1950 plus 1950. So how much is he going to get? 16. 550 is the deduction which is going to which is going to be given to him. His taxable income will be 43,450. How much, sir? 43,450. Now let us compute the tax. Directly I'll do it. See, first limit is what, sir? 11,600. It is 10%. 47,150. It is 12%. 11 into 10%. 43,150 minus 11,600. 31,550. 12%. And on 300 it is 22%. Directly I'm doing this. How much, sir? 1160. 31,550 into 12%. 3786. 300 into 22%. 66. This is the answer for this. How much, sir? 11,600 plus 3786 plus 66. 5012. This is the tax which he has to pay before credits, etc. Okay, so this is the, questions with respect to this. I mean, just for practical or understanding purpose, of course, we are going to have MCQ based questions. Now, residential status, first year choice. We will read this from the material ones. Federal income and income tax rates and deductions, and we'll solve some 10-15 MCQs and complete this topic. Federal income tax rates and deductions. According to federal income tax law, all income is taxable except with specific exclusions. So there are some incomes which they specifically says are not taxable, meaning they are exempt, correct? So whatever income is exempt, that is not required to be taken into consideration at all. For calculation of taxable income, in order for a taxpayer to first we should calculate tax. In order to calculate tax, in order for a taxpayer to calculate their tax liability, they need to do the following. What are the steps, sir? Step number 1, determine the gross income. Step 2, determine their adjusted gross income. Step 3, determine their taxable income. What is a gross income? Gross income includes all forms of taxable compensation. Please note, the law does not use the word income. They say all forms of taxable compensation. What is compensation? Whatever amount is paid to you. The taxable compensation means, sir, anything paid. Anything which is received by you. Anything received by you, such as wages, salary, commission, tips, self-employment income. It covers non-monetary form of income also. Non-monetary form of compensation also. So if there is any compensation which is not in monetary terms, say I am working somewhere, for example, there is a doctor. Now in US, maybe it will say there is a doctor. So there is a doctor. So the doctor has done a treatment of a person for which he is charged $150,000. Okay. Apart from that, the persons whose operation he did know, he was so happy that he gave him his house. So what's a compensation can be in monetary as well as non-monetary terms. This also should be included. It covers non-monetary forms of compensation also, like goods, property, services, taxable fringe benefits such as interest, dividend, capital gain, stock options, etc. Determine the adjusted gross income. Adjusted gross income of a taxpayer is by subtracting. How do I get adjusted gross income, sir? By subtracting certain specific deductions or adjustment from the gross income. How will I get this? I will have to subtract some specific deductions and adjustments from the gross income. For example, examples of some of these are above the line item deductions include individual retirement account contribution. So whatever contribution you are making to your retirement account, so that means you are saving money for your future. You are doing a good thing. I will give you deduction. Certain expenses for self-employed individuals, deductible student loan interest, penalties paid to banks, earlier withdrawals of saving, etc. As I told you, this is nothing but the deductions which we have in our income tax law from the gross total income. That amount of taxpayers adjusted gross income is important because it helps to determine the eligibility of certain deductions and credits. Determine their taxable income. So step number 3 is to find the taxable income. Taxable income is calculated by subtracting additional deductions, that is standardized deduction or itemized deduction from the gross total income. The next table has simplifies the example ... So I will take gross income, subtract adjustments to this gross income, I'll get additional gross income, subtract the standard deduction, itemized deduction, you will get your taxable income. Then from the gross, how I compute the tax? I will compute the normal tax, whatever tax we have computed. From that, subtract tax rate, subtract any prepaid tax or withheld tax or estimated tax. You will get your final tax dues or whatever refund is applicable to you. Income are of two types: earned income, unearned income. Earned income such as wages, salary, tips, professional fees, self-employment income is received for services which are performed by you. So if you do something for that particular activity which is done by you, if you receive any money, that income is called as earned income. This category also includes self-employment earning from business or farm ownership. Unearned income includes interest, dividend, retirement income, taxable alimony, or disability benefits, which actually you are not earning. You are not physically going and working anywhere, but still you are receiving that money. What are the federal tax rates? An individual's federal tax rate, an individual's, an individual's, an individual's federal taxable income is taxed at progressive rates. Progressive rates means what, sir? As and when your income is increasing, the amount of tax which you have to pay will also increase. For the tax year 2024, there are 7 tax brackets for individuals: 10%, 12%, 22%, 24%, 32%, 35%, and 37%. The bottom tax rate is what, sir? 10%. So we have seen this point. We have written all these things, categories. So for single, married filing jointly, qualifying surviving spouse, head of household, and married filing separately. Now, in addition to regular tax in United States, they also there is a parallel tax called as alternate minimum tax. So there is one more type of tax which we are going to see later. What is this, sir? Alternate minimum tax. What is this alternate minimum tax? Apart from whatever normal tax you are paying. See, normally the tax which a person has to pay is normally whatever tax you are supposed to pay will be the tax computed on your income, or let us call that as your normal tax computed on your income, or your alternate minimum tax, whichever is higher. Meaning, many times what may happen is the amount of tax which you are liable to to pay to the government may be very less. Why is this reduction in your tax liability? Because you have taken a lot of different benefits. So there are a lot of credits which will be given to you, a lot of benefits which will be given to you. If you are taking those benefits or credits, lawmaker says, because of that reason, I am losing my revenue. Lawmakers are telling what, sir? Because I have given a lot of benefits to you, a lot of credits to you, because of which the revenue of the government, the tax revenue of the government has decreased. Because the tax revenue of the government has decreased, the government will collect alternatively a minimum amount of tax, meaning minimum this much you have to pay. Whatever normal tax is there, that, or the minimum amount of tax, whichever is higher, is the tax which is required to be paid. Anyways, we'll see that. In addition to the regular tax in the United States, there is a parallel tax called as alternate minimum tax. The taxpayer must either pay the regular tax or alternate minimum tax, depending upon whichever amount is greater tax amount. The AMT is covered in more detail in our later chapters. We'll see that. So that computation, etc. Now, gross income and filing requirements. If your gross income is equal to or more than the amount in the table based on the filing status and your age, you must file your return. If you are a single and under 65, 14,600, 65 or more, it is 16,550. Married filing jointly or qualifying surviving spouse under 65, if both are under 65, 29,200. If one of the spouse is 65 plus, please note 65 or more, then it is 30,750. Both are 65 or more, 32,300. Then married filing separately, any age, $5. Head of household under 65, 21,200. All these things we have written. 65 plus 23, 850. Self-employed more than $400. Church employee more than $108.28. Then what is the standard deduction which I am going to give you? Standard deduction for the tax year, if you are single or married filing separately, 14,600. Head of household, 21,900. Then married filing separately or qualifying surviving spouse, 29,200. Dependent person, then dependent person, how much is for dependent person, sir? For dependent person, the standard deduction for dependent is greater of 1,300 or earned income plus $450. However, it shall be restricted to 14,600. And additional standard deduction will be given for those who are age is more than 65 years or those who are blind. So it will be given separately for 65 plus years and for blind and partially blind people. How much, sir? If you're a single head of household, it will be 19,150 and 1550. 1950 for single and head of household and 1550 for married filing jointly, married filing separately, and and qualifying surveying spouse. Where did we discuss the question yesterday? Where is that question file? Yeah, here. So up to 15 we had seen yesterday, US citizen. So deduction. What is the standard deduction for single filer in 2024? For single, what is the standard deduction, sir? Can I say 14,600? Additional standard deduction if a blind person. For blind person, can I say additional standard deduction is 1950 if you are single or head of household? Then for married filing jointly, how much additional deduction if 65 plus? If 65 plus, you will get how much, sir? 50. Medical expenses, this is something which you have not covered. Medical expenses of $6,000 with aggregate 50,000, how much is deductible? We will see later. 2250, but we'll see this later. I mean, when we are discussing about itemized deduction, this falls under itemized deduction. Which of the following is not deductible from schedule A? Again, we will see it later. Salt deduction, again, this is also that category. Dependent standard deduction is greater of case number B, 1,300 or earned income plus 450. Charitable contribution, again itemized, it falls under itemized deduction, which we'll see. Gambling loss is deductible up to winning, we'll see that all later. Single filer blind, this double, okay, he will get double deduction, which is 14,600 plus 1950 plus 1950. So the answer comes to what, sir? 18,500. Itemized deduction, above the line deduction, we'll see those later. What is the standard deduction for head of household? It is 21,900. Married, one spouse is 65, other is blind, both of them will get total additional deduction, both of them will get 15,500, which is 3,100. Okay, whatever itemized deduction points are there or whatever other deduction related points are there, we'll see later. But this specific discussion which we had was specifically for what, sir? It was for standard deduction and filing threshold. I hope this point is very clear to you all. Correct? This point is very clear to you all. We'll stop this class over here only. I hope you have understood whatever we have discussed, and if you have any question, you can definitely ask me. And until next class, tada, bye bye, take care, enjoy. By the way, anyone has any question, you can ask me meanwhile. Okay then, let us meet again in our next class. Till then, tada, bye bye, take care, enjoy, happy studies.